Traders. We've got a setup taking place here on the Aussie US dollar, the 5-minute chart. It's classic Wyckoff principles, some of the stuff that we use here at Informative Traders. I just want to go over how we see this setup playing out. As you can see here, we've had obviously a large drop-off late last week on the Aussie US in the late Friday afternoon session. We've seen some preliminary support come in here, all this volume here, and we've seen a climax down the bottom here where all the supply has started to be taken out of the market. We did see a rally after that. Now these then form our trading range, the lines that I've got in here, the bottom of the trading range being the selling climax and the top of the range being the automatic rally. We've then come down, we've had a secondary test of the climax. You can see that the volume has fallen away in comparison to the selling climax. Then we've gone to the next stage or next phase where price tends to move sideways and they're trying to get the supply out of the market. As you can see, the supply starts to fall away, and finally now we've started having some testing. We've come down here and made a false break and sprung back up through it. Wyckoff called this a spring. It's pretty much a bear trap. Once the price falls lower than the selling climax or makes a new low, the bears step in and want to short it, and then the price is moved back up through it, catching them out. Now, as you can see, I've put this supply line in here. This last high before the new low was created is important. It's where supply came in. So I've put a supply line in from where the original supply came in and now where we've seen supply again. And as you can see, we've actually retested that area, which is also a retest of the selling climax level. And now we're starting to move away from it. So I've started a small position here off that bounce. What I would like to see is if we could get this is the high before that we need to take out to make the new high. I would love to see price come up through here, come back down and have a false break through here and move back up, some sort of spring-like action, and I would open another position and then hopefully see this start to mark up. So I'm taking close eye of this. I've got a position on. I'm looking to get in further if it plays out. I've got a small stop just under the spring. So as you can see, this is a very small risk for potential great reward. So I'll update as we go. Cheers, guys. Okay, so if we have a quick look at the point and figure chart to see if we can get some sort of projection, we can see that we are building some cores in this area. Now, if our analysis is right and we are accumulating, we will see a markup higher. We're using a 5 pip box and a 3 box reversal. And to clarify, the green boxes are the X's or up moves, and the red boxes are the O's or down moves. If the next box here was to start moving higher, we could do a count, and that would be 1, 2, 3, 4, 5, 6, 7. 7 columns wide times our reversal size times our pips, and that's going to be 105 pip projection. And now currently our bottom box is about 9050, so if you add that to 105 pips, we're looking at 9155, 0.9155 as somewhere where we'd be looking to get out of the trade. Now obviously if this does start to mark up, this will continue to mark up until supply comes in. So until we see large volume bars closing in the middle, reversals, that sort of thing, I'll remain in this trade and I'll be looking for this sort of area as the target. So let's see how we go. Cheers, guys. Okay, guys, so the trade's played out. Let's have a look at it. When we left off, we were in this area retesting this supply line. We actually pushed sideways a little bit further. We had a retest of this level down here, and we started to make our way up. Now, as you can see, the trade has played out. let's go over the management of the trade. First of all, if we look at, there was another supply line that I put through here, and this is the area where the supply came in. So if you see here, this is another area where I took another position. I took half a position down on this retest. I took my other half position on this retest of this supply line. I had my stop under the spring, and as you can see, the trade's played out. Now, as it started to move up, I did actually take another position when I noticed a retest of these highs. So we had highs here, we fell away, we came back up and we retested it here. And you can see that we did have a little pin bar reversal or spring off that level, and the next couple of bars we had low volume, so there was no supply around. So I took another entry and price started to move up again. As you can see, we got up to about the 145 level. I was targeting 155 approximately to get out of the trade. I did take my profits up in this area, and I'll go through that now. One thing you'll notice is as we moved up on these rallies, the first one we had a pullback, and the second one we were getting good upside to those rallies. And then when it pulled back this time, you can see that the next rally was a lot weaker. We only fractionally got above the highs, and it was actually a shortening of the thrust, and it was starting to see some weakness come in. What I actually did was, when this fell away and came back up here and I saw this little pin bar, which was a rejection of that level, I actually closed my positions. So you can see there I actually got out on the highs. Now that was because I identified that the power or thrust of this up move was starting to wane, and we weren't getting any further thrust higher. This should have moved higher if it was still bullish. So if we take another look at the point and figure chart that we looked at earlier in the video, this was enough cause to create the effect of pushing the market higher. And also you can see that that shortening of the thrust is identified here as well. You had the large up move, and then the next up move, there was no follow through higher. So we managed to trade great. We got out around the highs, and the reason that we can do that is with this point and figure projection higher, we know an area where price is looking to get out, where it will project to. And by using it, it takes a little bit of the fear and anxiety out of the trade. Newer traders trying to take profits too early, it takes that out of it. You've got a target in your mind that you can look at, but also you do have to manage the trade. Look to see if supply is coming in. All those factors that may cause a reversal. So we had 3 good trades in this up move with very little risk. The first 2 were taken very close to the stop loss. So if it had have gone against us to start with, we would have been out for a small loss. But what's happened, in fact, we've gone a lot higher, we've made good money, and we've managed to trade pretty well. So if you combine looking for the setup, those Wyckoff principles, you wait for the best entries, you use your point and figure charts, you can project where price is likely to go. It won't always go there, but that's why we manage the trade as it happens. So good luck with the trades, guys. Cheers.